Hello, and welcome to our highly anticipated session on PPP loan forgiveness. This topic has been top of mind for pretty much any business or organization that received a PPP loan. And we hope the session today provides some clarity and helps you maximize your loan forgiveness. I'm Stacy Dreher, Marketing Director for James Moore & Company, and I'll be your host. We understand that many of you will likely have questions regarding your personal situation, and we encourage you to submit them in the Q&A panel, and somebody from our firm will follow up with you as soon as we are able. We also ask that you help us by sharing this webinar to your contacts and friends and anyone else who might benefit from this information. Additionally, our firm can help you with the PPP loan application if you need assistance in this area. Don't hesitate to email us at info@jmco.com to get that process started. And our presenters today are two of our firm's PPP experts, Aaron Spivak and Mike Sibley. And in addition to their credentials listed below, Aaron and Mike lead our internal CARES Act and PPP team and have spent countless hours reviewing the legislation, the interim guidance, staying current on everything that's changing, and sharing this information through our COVID-19 Power Lunch series, through webinars such as today, and countless articles. So Mike and Aaron, can you walk us through the PPP loan forgiveness process?
Yes, thank you, Stacy. And like you said, it's been a long time coming. We finally don't have to say waiting for all additional guidance, although it's not 100% there, but we finally have something that we can work off of. So today, Mike and I are going to walk you through an overview of the PPP loan forgiveness application. We're going to give you some definitions of costs eligible for forgiveness, and finally walk you through the application and what you'll need to do to actually complete it. And the application itself is only a few pages long, and actually one page to actually go through what your basic loan information is, your eligible payroll and non-payroll costs. It asks you for your calculation of your FTEs, which are full-time equivalents, any salary reductions if applicable, and calculates the loan forgiveness amount. Unfortunately, there's a lot more that goes behind that to actually get those numbers, but through this application form that the SBA put out last Friday on May 15th, I believe, they gave us a lot of definitions and worksheet instructions to go through here. Unfortunately, they didn't give us 100% of the answers that we needed, but they gave us a lot to at least get started with, as I know quite a few of you are coming up on your 8-week period since the time you got the PPP loan. So one thing that we do want to caveat on the form that they produced is we've already heard rumors that there may be another updated application form coming out. So obviously you want to always check back either with your CPA or on the Department of Treasury website under the link that has the loan application to make sure nothing substantive have changed. Because as we have realized is as they've issued frequently asked questions on sometimes a daily, twice daily basis, sometimes they go a week behind them, they kind of go through as questions come up, they address them, and we certainly wouldn't be surprised if they update this loan application form. We're also going to kind of walk through as we go through this application and the Schedule A, which is really important to help come up with some of the numbers that go on the application, that there are a bunch of spreadsheets that are already out there. We've already developed our own internally for James Moore & Company of how to complete that, and that's something we're going to walk you through. However, we do want to caution people on a couple of different things. One, that the spreadsheets are really good, but you have to be very careful in how you complete it. And a lot of the spreadsheets have notations or if this, then don't complete here. And so you could really get yourself really over-calculating or under-calculating the amounts if you don't pay attention to the instructions. And every spreadsheet that we've seen has been different. And second is when you actually go to apply for your loan forgiveness from the bank, each bank we expect will be a little different in what they're requiring. The standard SBA loan application, the loan forgiveness application, they have to give you, but we don't know if banks are going to ask for additional spreadsheets of support for some of the documentation that you'll be providing. So obviously you need the spreadsheets that whether we help you with it or you get it from the internet or something of that nature, you want to make sure first with your bank that you don't have to fill out something on behalf of them. One of the other things is we've talked about before is this definitely gave us still some unanswered questions really related to the loan forgiveness reductions that can happen. We've talked about this before, and we'll go through this in a little bit more detail, in the facts that if you don't have the same amount of FTEs or you reduced people's wages by more than 25%, your loan forgiveness amount can be reduced for those factors. There's still some kind of questions out there, and when they came out with the Schedule A worksheet, which we'll kind of talk through that in a bit, and we're not going to get into the specifics of the unknowns. However, if you have specific questions related to this for your business or for yourself, please email us, reach out to us so that we can address your situation specifically and help you either rectify it or give you clarity on what's going to actually happen when you apply for the loan forgiveness, or let you know that, yes, that is one of the things that we're waiting for additional guidance on, and as soon as we know, we'll be able to pass it along. So one of the other things that we're going to talk about too is that as you go through this process, you want to update it with any changing information that happens as the closer you get to that 8 weeks, just so you have a really good sense of where you are as far as what your loan amount is and what potentially could be forgiven. That, in saying that, I have clients call on a weekly basis where they thought everything was going to rock along just as planned for the 8 weeks, and things come up all the time, whether it's people quitting, whether it's people having to go out for COVID-19 reasons, whether it's something dropping in their laps they didn't expect. So make sure that you are paying close attention as you get closer to this loan forgiveness application time, that you're altering it so you know what to expect on the backside. So the things we talked about here, the Schedule A worksheet, this is not required to be submitted as of today, but however, it does give you the information that you will need to complete the schedule for the loan forgiveness application. It's kind of hard to complete it without working through the worksheet, honestly. It kind of accumulates our per employee cash compensation, our full-time equivalents, and calculates any of your potential reductions to your loan forgiveness due to salary reductions or hourly reductions. There are separate tables for employees who make over $100,000 on an annual basis and those under $100,000 on an annual basis. And we'll talk about that a little bit more as we got more clarification in this application form related to that. It also goes through the safe harbor calculations and when calculating your FTEs and the wage reductions, where there's certain times that you may have one of your reduction in FTEs or a wage reduction, but you have an exemption, but it doesn't mean you'll have to reduce your loan forgiveness. Sorry, it's a little bit delay in our slide thing. So we'll talk about our definition of costs eligible for forgiveness. Now, these should look pretty familiar to you. You had to go through these when you actually did your loan application. Again, defining payroll, it includes all payroll, salary, wages, tips, commissions, paid leave, with exceptions for any leave that you took a credit for on the FFCRA, which is the required paid leave that you may be under that exception for. You're not allowed to double count that. Each individual employee, the total amount of cash compensation that's eligible cannot exceed an annual salary for $100,000. What's interesting about this is that if you pay more than $15,385 during this 8-week period to any employee, that counts. That's the max amount that can count. One of the big questions that has come out there is saying, hey, can I bonus employees or can I pay them back pay? And so that during this 8-week period, I can get as much payroll costs included in this period as possible. And the answer had always been, well, we think so, but we need additional guidance. This application form actually says that if you pay more than $15,385, that's the most you can count per employee. So this kind of answers the question on the bonus commission thing that we had been wondering about, where if you wanted someone who normally didn't make more than $100,000 in a year, maybe you wanted to give them a big bonus to eat up these payroll costs, this kind of answered it and saying, well, you can't pay them and have it count toward your loan forgiveness more than $15,385. Again, they may come out and clarify that further, that maybe if you gave someone a bonus, it wouldn't count, but that seems to be how the form is working today. Other payroll costs are included are employer contributions for employee health insurance, employer retirement plans, and of course, state and local taxes that are assessed on employee compensation. The next thing we'll talk about is the covered period versus the alternative payroll cover period. So one of the big questions was, when does my 8 weeks start? And they clearly come out with one of the interim rules and said it starts on the day that you received the loan. Like, that's when your clock starts ticking. They laid in this application form, they came out and said, well, we're going to give you a little bit of a caveat here and say you can either start it on the day that your loan is given. That's when the clock starts ticking. Or you can pick an alternative payroll cover period. And so basically, if your payroll wasn't lining up correctly, and that you wanted to start it because you're on a biweekly basis with the next payroll that happened maybe a week after you got the loan, that is allowed. And so you have to elect whether you're going under the cover period or the alternative payroll cover period. So what this allows you to do is maybe stretch your 8-week period to a different period, not stretch the length of time, but stretch it to changing it to more align with your payrolls that happened. And that really is helpful because a lot of times people got their got their PPP loan on a Thursday. Their payroll was the next Friday, and they hadn't hired a bunch of employees back yet because they weren't open or they hadn't brought them back from furlough. And so that was really going to hurt them because they didn't want to have the employees come back on before they got the money. So this kind of allows this alternative payroll cover period, and you can calculate whichever one works better for you when doing your loan forgiveness. But you do have to check on the form which one you are choosing. Eligible payroll cost, again, we kind of go through what we already talked about, what is allowed, which includes the payroll cost that you have for salaries and other stuff, as well as your health insurance contributions, 401k, and such. It does limit you to the 8-week period, but it allows you to do either what you paid or you incurred, right? So this kind of goes to that whole cash compensation definition, which I'm actually is defined in the application program that says your cash compensation is either what you paid during the 8-week period or what was incurred during the 8-week period, and kind of not both. And there has been a lot of questions related to that. And again, they may come out and clarify that it's differently, but our firm belief is that it is 8 weeks of payroll, regardless of how you want to go on that. Additionally, non-payroll costs, which we talked about before, remember they had come out originally after the PPP loan came and said, hey, you have to use at least 75% for forgiveness purposes for this for payroll costs. We're only going to allow the non-payroll costs to hit 25% of that bucket. And you'll see that as we go through the actual form and how we calculated that. As a reminder, the non-payroll costs include rent, mortgage interest, or utilities. Now, what they did define in this application form, which was really interesting because it wasn't included originally as part of the CARES Act definition, is they said interest or rent on real or personal property. So that opens up the avenue of putting some more of your non-payroll costs if you hadn't already maximized that 25% bucket. Again, these are for things that are paid or incurred. And when we get to the end and we talk about the documentation, they will want proof of when, if you have leases or for personal or real property or mortgage interest or utilities, that you're proving either what the bills were and how they were paid. And so it kind of says those leases and all that stuff has to have been in place before February 15th, 2020. You can't go enter into one today so that you can use part of this bucket. And again, we'll kind of go through how this works as we go through the form. So some of the key dates for these calculations that we want to point out is FTEs, which are referenced a lot in this application, and as you'll see as we work through the worksheet, full-time equivalents. You'll need to know what your average monthly FTEs were for February 15th, 2019 through 6/20/2019, and our average monthly FTEs of 1/1/20 through 2/29/20. Okay.
Hey, Erin, just to correct you, that should be 6/30/2019. That's just a typo error on there.
Oh, yes, thank you. As I read it, I was thinking it didn't seem correct. Okay, so it's through 6/30. Okay, so our average monthly FTEs 2/15/2019 through 6/30/2019. Our average monthly FTEs 1/1/20 through 2/29/20. In the case of a seasonal employer, any consecutive 12-week period from May 1st, 2019 through 9/15/19 may be used. And there is a safe harbor when we talk about what your total FTEs were as of February 15th, 2020, or your average FTEs from 2/15/2020, April 26, 2020. Again, we'll kind of get through what that means in here, but they did add that in this form. For the wages safe harbor, you're going to want to know what your average hourly wage or annual salary as of February 15th, 2020 was for each employee, and your average salary and hourly wages between the dates of February 15th, 2020 and April 26th, 2020 for each employee that you're including on your payroll here. Now I'm turning it over to Mike, and he gets the fun job of walking us through the application and the spreadsheet.
All right, bear with me as I switch the spreadsheet over, and this is going to be you'll see my eyes moving around and me moving around as I move us through. What I really have here is a spreadsheet imitation of the actual PDF application. As Aaron mentioned, we have started working on our own application spreadsheet, so that way we could one, work through the calculations and make sure we understand exactly what they're asking for, and also begin the planning process. We do have a number of clients who want to know where they're going to be at the end, especially if they're a business that are bringing back some employees but not bringing back all, trying to work through different scenarios of what they're going to be looking like. But what I want to do here is start covering each of the pages and then ultimately get into the worksheet. That's really the crux of the calculation. What you're going to see on the application is it's going to ask you to put your loan amount and the date you received the loan. It's going to ask a little bit of these demographics in terms of number of employees at the time of the application and at the time of the forgiveness. These numbers actually don't really flow into anything. And then, of course, if you got an EIDL advance, so that was the economic injury disaster loan, there was a number of companies who applied and received an advance. And if you recall, it was based on the number of employees. So you might have gotten $1,000 per employee up to $10,000. And of course, at some point, the program did start to run out of money. But if you did receive an EIDL, it will reduce your forgiveness amount because that grant was considered automatically forgiven. You just had to use it on the purposes that the EIDL, payroll and overhead type costs, and it would be automatically forgiven. But if you also received a PPP, it was going to reduce your PPP amount. What you're going to notice on the application as it stands right now is it doesn't actually have an area on it where it reduces the forgiveness amount by the EIDL received. We've added it into this for purposes of just information. And keep in mind, I think Aaron mentioned it earlier, this is as of what we know and are interpreting right now. There are questions that are not resolved very well, and we believe there's going to be another application. We believe there's going to be more clarification, but we do think this is far enough along where, as an organization, you can begin gathering data, which Aaron will go through in a little bit, gathering data to start completing this and start pulling it together, or perhaps plan out and see where you might fall. Certainly, there's those safe harbors that we're going to talk a little bit more about, and you need to know where you stand, so you may be able to strategize on applying those safe harbors. As Aaron mentioned, there's the covered period or the alternative payroll covered period, and keep in mind that you've got to choose one, and then you've got to stay consistent as it relates to payroll throughout the application. You can't flip back and forth. As it relates to the overhead costs, meaning the mortgage interest payments, the rent, utility, it has to stay on the covered period. So you're going to be locked into that for your overhead. The application then goes into these line items right here. And one of the things I've done, and this is really from a spreadsheet standpoint, is to show what's linked versus, and that's for our internal purposes, but it does show you that these are coming from other schedules where you're going to pull this from. So we'll start line 1. It actually is your payroll costs. These are your total payroll costs. That's the cash comp for those employees under 100K, those employees greater than 100K. It includes owners. It includes the employer portion of healthcare, retirement, and the state and local taxes. All of that, of course, that comes from Schedule A. You can see enter amount from PPP, Schedule A, line 10. I'm going to go over that schedule in just a minute. So this is page 1. This is pulling from effectively page 2 of that, and it's called the PPP Schedule A. These items right here, business mortgage interest payments, rent, these are all just coming from a summary sheet that is not in the application anyway. I just put it in here as a way to track costs. I'll show you that in a little bit. But these are your mortgage payments, your rent and your lease payments, and your utility payments. One thing that I've added in here is accrued interest. Accrued interest is part of the process. It's going to be forgiven to the extent that you have a forgivable loan. However, it's actually not included in the application at this point. It's unclear how they're going to incorporate it. We've put it on here just for discussion purposes only at this point until we see what they're going to do. So this, as you can see, is the starting point for our accumulation of our payroll costs. And keep in mind, these numbers are all made up, by the way. And so we just, as we test out our sheet. So this is the start of our accumulation. Then it goes down, the application goes down to line 5, and it goes to this wage reduction. Again, this is going to come from the PPP Schedule A worksheet, and I'm going to show you that worksheet. But effectively, if somebody's wages, one of your employees' wages was reduced by more than 25% during the 8-week period that you have the loan, then there's a calculation that takes the difference between the 75% and wherever you end up. So for example, if you reduce somebody's pay down to 65% of what they were before, there's a 10% difference between the 75%, which is 25% reduction, and effectively a 35% reduction. That 10% is going to calculate into a reduction of your forgivable amount in this. And we're going to walk through that calculation. It gets a little bit complicated because there's a number of pieces to it. And then ultimately, if you restore them back to their original salary by June 30th of 2020, you get the safe harbor, and that reduction no longer applies. Then what happens is line 6 here adds all those together. Line 6 will take all of these amounts right here and come up with what we have is a total of $50,000 of payroll costs and other overhead costs that we will look at in terms of forgiveness, okay? Line 7 of this is your FTE reduction quotient. What that means is if your FTEs go down, remember, if you think back to all the conversations we've been having over the many, many PPP luncheons that we've done and conversations, we mentioned there's going to be the potential for 2 different reductions. One is if you reduce employees' pay below 25% of what they were before, or more than 25% of what they were prior to the 8-week period, or if you reduce your FTE count. So if you go to 80% of where you were, FTE-wise, in other words, if you had 10 FTEs in one of those periods that Aaron pointed out earlier, and you go down to 8 FTEs during this 8-week time frame, you're going to look at a 20% reduction. So if I blow a formula here just to show, if I put 0.8 in here, you can see my modified total goes down to $40,000. That's the max amount that I'm going to get forgiven in this loan process. Okay, so it's going to be really important, and this is one of the things that, as Aaron will talk about, this is the information we can start gathering now. Lines 8, 9, and 10 are 3 different evaluations of what you possibly can get forgiven, and it's going to be the lowest of the 3. So let's back up here. Line 8 is my total of my actual costs incurred, so our $50,000. And how did I get to that $50,000? Again, it's my payroll costs, it's my mortgage interest, my rent, my utilities, backed out my wage reduction, multiplied it by basically a 1-to-1 ratio because my FTEs were right. So I only spent $50,000 in this 8-week period. As you saw above, my loan was $150,000. And so clearly I came in well under the loan amount. And then, as Aaron mentioned before, and we've been talking about again, the max loan you were going to be able to get forgiven was based on 75% of your payroll costs. So what they basically said was divide your payroll costs, which is this line right here, $44,000 in our example, divide that by 0.75, and that comes up with 59,000. So that would have been the maximum that I could get forgiven. One of the things we've talked a lot about over the past several weeks was this worry that it was all or nothing, that if you didn't spend 75% of this $150,000, you were getting nothing forgiven. And we didn't think it was really going to come down that way. We really thought this was going to be what they were going to do, is 75% proration. So they've grossed that up to say the max is $59,000. So for example, if our mortgage interest payments and our rent and our utilities, I can just, the nice thing about having a spreadsheet here is I can show you, if I put this in at $10,000, well, let me get a real high number here, 15,000, you could see my total is 62, but I'm still maxed out at 59,000 because my payroll, now my forgiveness amount is the 59,000. It doesn't matter. It's driven by my payroll in terms of what ultimately is going to be allowed to be forgiven. And what this does, what line 11 does, is effectively takes the minimum amount of these three, whichever one is the lowest. And then for additional purposes only, I've just added in, I said, okay, we got an idle grant of 5. We've got a net amount to be forgiven then of 45, which means we're going to have $104,000 that needs to be repaid in this example. All right, so that's how page 1 of the application basically looks with the additional pieces that I've added in. I'm now going to take a look at PPP Schedule A. And again, this is all in the PDF at the U.S. Treasury website. You can click on their COVID links and you can download this application. Now, the way this works is it breaks it down into a couple of components, actually several components. The first part of this are for people who are less than $100,000 in annual salary. And what this does is it says, okay, I want you to take all of those people, and what the suggestion is, as you can see, is it's going to pull from Schedule A worksheet. As Aaron mentioned, that worksheet is not required to be submitted, at least in terms of the SBA rules. I don't know if any banks will require it as part of the process. It's possible, but it's certainly going to be a necessary worksheet to go through. So what it does is it pulls the summary of all the cash compensation for employees during that covered period or alternative covered period, and summarizes it into this one box. Then it calculates the FTEs. So that worksheet is going to calculate your FTEs. So your full-time equivalents are going to come from there, and it's going to carry to here. This line right here, as we talked about, is going to be any reductions. If there's no reductions, you might be in a situation where none of your employees received any reduction greater than 25% of their salary. And if it was at least 75%, you can put a check mark here and move on. This will be 0. As we mentioned early on, there's 2 tables on that worksheet, one for those greater than 100,000 or less than 100,000, and another table for those who during 2019 had annual salaries greater than $100,000. And one of the things you're going to notice in here is there's no reduction amount. It is assumed that it's designed that anybody who is making more than 100,000 will not, no matter what if they receive a 25+% reduction, it doesn't hurt you on this calculation. It will not affect you. So you'll see there's no calculation for it for those greater than 100,000. This just summarizes from that worksheet, box 4 of that worksheet, the total salaries for those employees. And again, it's limited to $15,385 per. And you can see we only have 1 FTE. The next component of this application then says, oh, my Siri's going off on my watch, so you guys probably have to hear that. So the new Apple Watches are very sensitive and good at picking up things. So the next section of this now brings in the other payroll costs, and by now you're well familiar with it. The employee health insurance, so it's the employer portion of the health insurance, so be very careful about that. the employer contributions to employee retirement plans, and then state or local taxes, generally what we refer to as SUTA in this particular case. So you're going to enter those in. You're going to notice that there's another section for the owners of the business. The owners of the business do not go in table 1 or table 2, and they do not count in your FTEs. It's one of the critical things to put in there. In our example here, we did not. The owners of the business don't receive any compensation for whatever reason. You will see our formula says we have $44,270 of payroll costs. And if you recall back to our page 1 of the app, this will then flow to that page. Okay, so that's how we get to our payroll costs in a summary version on page 2 of this. Now the next thing is we have our full-time equivalency reduction calculation. So the first question that it's going to ask is, do you meet the safe harbor calculation for FTE reductions? And so on the application is a blank line that walks you through. This is the exact way that you do the calculation here. So what you're going to do is you enter your total average FTEs between February 15th of 2020 and April 26th. Step 2, enter the total FTEs in the borrower's pay period inclusive of February 15th, 2020. So again, go back to Aaron's slide on key dates. These are the key dates. And I'm going to show you how you have to calculate the FTEs. Once you use one method, you got to use the methods for all of them. Okay, so then it says step 3, if entry for 2 is greater than 1, then you proceed to step 4. Otherwise, you don't meet it. So in our particular case here, we said, we don't meet it, we move on. But if you do meet it, then you need to know the borrower's total for as of June 30th. This is the safe harbor. This is ultimately the safe harbor. Is if we restore all of our FTEs by June 30th, we are automatically considered to have a 1-to-1 ratio and no reduction for our quotient. So it's very possible you are almost to the end of your 8-week period, or will be nearing the end of your 8-week period long before you get to that June 30th point. Clearly, we're going to have to wait and see where we're going to be at and have a conversation about do we meet this safe harbor or not. In some cases, it's going to be very clear. There's businesses that are not going to be able to get back to that, and this won't apply. If this doesn't apply, so we don't meet it, now we come back up here and we say our safe harbor doesn't apply, and then we need to go to our next set of calculations, and we say, okay, what was our FTEs during our chosen reference period? I'm going to again go back to what Aaron said on the dates. Our comparison period is we're going to compare the 8 weeks that we're under, which is line 12, and I'll show you how we get there, versus those other two, one of those other 2 periods. And we're going to pick the best one. So one period is June 15 through, February 15, 2019 through June 30th, 2019. So that's one period. The next period is January 1st, 2020 through February 29th, 2020. I know your guys' heads are spinning with dates right now, but this is really how it works, is going through all of this. So you're going to calculate your FTEs in those periods and compare them to where do we end up now. As you can see in our example, our average FTEs came out to 4.75 during this time period. So we don't actually have a reduction in our calculation for forgiveness. We're in good shape because we're able to maintain and actually increase our FTEs. I realize this is a lot of dates, but these are all the different components of walking through this. So again, this Schedule A summarizes your compensation calculations and determines where you stand on your FTEs. I will now flip over to our Schedule A worksheet. This is where, now what you will see in the actual application is just a small version of this table. we exploded this out to a much larger version, so that way we could manage to do the calculations that we need to do. As I mentioned, table 1 is for those employees less than 100K in compensation, or new employees during the year. Table 2, and I'm just going to cover table 2 first and foremost. Table 2 is for those employees with annual salaries in excess of 100,000. So we've got John Smith here, who made $25,000 during the period, but we're going to max him out at $15,385 because that's what's required. And we're going to say 1 FTE here because he's a full-time FTE. He's not an owner, He's just a highly paid employee. And you're going to see here it says box 4 here and box 5. So box 4, this is the number, this 15,385, and this FTE is what carries back to our Schedule A. So you can see table 2 carries to here. Any changes I make there carries to this for us. Okay, so that's how that summary is going to work. If we go back up to table 1, and really from here is where I walk you through. So we have our Jane Smith, Joe Smith, Parker Smith, Haley Johnson here. And what I've done, and this is for purposes of just knowing the calculations, because as you move, you're either an average annual salary that you have to know, or you're an average hourly wage, and it will differ on how you calculate this out. What you're going to see for purposes of the application, the table that's in the application is going to have the employee name, the employee identifier, gross compensation for box 1, and then box 2 and 3 will be FTEs for box 2, and box 3 is actually any reduction in salary, which we'll talk about. So let's look at Jane Smith here as our first example. Jane Smith is an hourly employee. Her first quarter, now again, I threw this in here for purposes of knowing what her average annual salary or average wage during that first quarter ends up being. She made $5,000, worked for an average of 40 hours a week. There's 13 weeks in the first quarter. And so we know her wage is $9.62. Then we're going to move on to our covered period. So this is a covered period or alternative covered period. During that time frame, she made $1,500 for that 8-week period. Now, what I have here is I did throw in gross compensation first and foremost because we just happen to have somebody who made $25,000 during this period. Had previously been $60,000, but must have been killing it one way or another and got $25,000. So I limited them to $15,000. They can't get any more forgiven than the $15,000. And what you can see here in box 1 is it's going to summarize all of those employees. That's the total cash compensation, and our total FTEs is 3.75. If I go back to my Schedule A worksheet, here's my 22,885 and my 3.75 FTEs. So you can see how all of this is coming together. So Jane,
hey Mike, I'm going to interrupt you real quick just
absolutely.
to point something out. Yeah, to point something out that has been a big question. They answered the FTE question, right? Is it 30 or 40 hours?
Yes, great point. It's 40 hours. Yeah. So you'll see here, Jane worked an average of 30 hours per week, and the denominator is 40. So Jane is a 0.75. Yeah. There is an alternative calculation on this. The alternative calculation, it's a simplified method that says anybody who's full-time, enter a 1. Anybody who works less than full-time, enter 0.5. So that way you don't have to go through this calculation. I'm not sure, I've seen calculations examples where it hurts you to use the simplified method and you're better off using the calculation, but you just have to go through and see which one would be better. We need to know this information anyway so we can get their average annual salary or hourly wage anyway. So in our example, we're actually physically calculating this out.
Yeah, and you can't enter more than 40. They don't let you count the extra hours. Yeah.
great point. If you have somebody who works 50 hours a week, they will not count as a 1 point whatever that turns out to be as an average FTE. So this limits you to 1 FTE. You can't get any further than that.
Yeah, thank you.
Yeah, no, thanks for clarifying that. So in this first section, we're accumulating cash compensation and we're determining what level of FTE they are for us. And we're going to get into some exceptions about this in a few minutes. The next section here is we need to make sure that nobody's salary got reduced. And it may be you may be in a very simplified situation that says, no, nobody got reduced, but this will help determine that for you. And this evaluates. Obviously, working 30 hours a week and on average in $1,500, you end up with what looks like a below minimum wage salary, but we'll ignore that for purposes of this. So they're at $6.25 average hourly wage, but they were at $9.62. So that means they're only at 65% of their previous salary. That's a problem for us. And that means we now have to either A, determine that they meet a safe harbor. In other words, we've restored their wages, or B, we're going to take a reduction against this. So let's see how this continues to fall out. So what you're going to see actually in the application is a walkthrough that steps through each of these steps. So it's a 1A, a 1B, and a 1C. Again, all we're trying to do is compare what they made as an average hourly wage in the 8-week period to the average hourly wage in the first quarter. And in our case, this turned out to be 65%. So we're going to jump to step 2 to say, okay, well, let's look at what their average hourly wage was as of 2/15/20. Again, remember those dates that Aaron mentioned. Well, Jane was averaged $9.62. So then we said, okay, well, what was her average hourly wage between February 15, 2020 and April 26, 2020? And it was $9.15. Didn't meet the threshold. We now need to see, as of June 30th, did we restore her wages? We're at $9.25. We have not restored her wages to their previous period of time. We do not meet this safe harbor. Okay. So that means we have to go to step 3. Step 3 starts with 3A, and we're going to take 75% of their original wage that they had before. So $9.62 is what she was making. 75% of that is $7.21. We're going to take that what we were at. So we know in our example that she dropped down to $6.25. We are therefore 96 cents lower than where we were. So that's going to be our reduction factor. We know she was working 40 hours a week on average, and that turns out to be $307 of total reduction. That difference, that $75 to 65% is $307, and that means box 3, we're going to reduce our forgiveness amount by $307. So it steps us through those calculations to get to that point where we say she was only at 65% of her original wages. She should have been at 75% to meet the threshold to not get a reduction. We have to pick up that extra 10% as a hit against our loan forgiveness. Now, that said, when you applied for the loan, if you remember back, you likely took your 2019 average payroll, you took your total for the year, you divided by 12, and you multiplied it by 2.5. And so many instances, most of these people were on probably a full-time situation. And so you were able to maximize that loan because they were in a full situation. In this particular case, you paid her less than you actually applied for originally, and that's now reducing what that loan forgiveness is coming against you. The same calculation goes through for Joe, Parker, Haley. You're going to do this for each of your employees. and go through this calculation. Now, if we quickly look at Joe, who's a salaried employee, as we mentioned, somehow or another, his wages went way up. And so the formula comes over here, and he says he's actually over 100% on average where he was. We're not going any further with him in this calculation. We're done. We don't have to worry about him. He's not going to have a reduction. But we go through this process for each and every employee. Now, I'm going to scroll down here, and I've got this line item for these FTE reduction exceptions. And one of the major questions that we had all along was, what happens if somebody doesn't want to come back? Well, we got that answer over a week ago when the SBA issued a clarification that said, as long as you extend a written offer to that employee and they refuse it, they're not going to count against you in the FTE reduction calculation. That's great news. If that's the case and you haven't replaced them, then you would put them on this line so that way you can get credit for the FTE and it doesn't hurt you. But they also expanded that list of exceptions to employees who were terminated for cause, employees who have voluntarily resigned, or employees who have voluntarily reduced their hours. To the extent that you have not reduced their, to the extent that you have not replaced them, you'll list them in this area and count them towards your FTEs. So that way, again, you don't have that reduction in your FTE exception listing. So that's a tremendous opportunity. There's still some clarifications that we still need to get into from them on how some of this works with salary reductions and FTE reductions. But for now, there's enough where we can start planning how this is going to work in terms of carrying that through. Again, you're looking at box 2. It's our total wages. You're looking at box 3 is our FTE reductions, and then box 2 is our FTE, and then box 3 is our salary reductions. If I go back to my Schedule A, you can see right here that all ties into my schedule. I am recommending, obviously, that you go through this process and do those calculations as support for making sure that you're, when you go to the bank for forgiveness, even if you have situations where you don't think you reduced anybody, having this calculation will support that. And really every single number we put on these sheets are going to need to be supported with calculations. So the last tab that I have on here for now is just an 8-week calculation or summary of those other expenses. So this, I'm going to blow this up a little bit so that way you can see it. But this is our mortgage interest. This is our rent, transportation, which we're still waiting for some guidance as exactly what transportation. I think, we think it's obviously gas for vehicles and things like for company-owned vehicles, but our guess is there's going to be a little bit more clarification on that. Our other utility payments. So this just allows you to track that by week. So that's something that we're going to be helping our clients with on these pieces. Ultimately, it all flows back to this sheet right here, which calculates or summarizes and then ultimately determines the forgiveness amount. And with that, Aaron, did you have anything else that I should cover or questions that you were thinking of as we go through this?
No, the FTE thing was a great one. So this is, again, this mirrors exactly what the application looks like. And I'll talk about in a second the documentation needed. But you can see it's a pretty tedious process when calculating if you have any wage reductions or FTEs and even accumulating the payroll cost. And I know that the payroll companies, that if you use an outside payroll company, they've already started to try and put these reports together, which is great as a help. But you want to make sure that you look clearly at the underlying data that's going in there, because you're submitting it to the bank as your application for forgiveness. And I'm not saying that you shouldn't trust them, but you want to make sure that you've ticked and tied to make sure that all those numbers that have rolled up correctly. In particular, one thing that I think is good, but again, interesting, is that if you're an owner of the business, so for example, if you're in a corporation or an S corporation where you normally would have employee wages, you want to make sure that you don't count yourself in table 1 or table 2, right? Because you don't get reduced for a wage reduction or an FTE reduction. And you want to make sure you clearly state yourself on that.
Yeah, that's a great point. And I would just say the application obviously the application has all of these details on it and instructions to work through and follow those through. So it's a good idea to read it. Even if you're not clear on what everything means, that's okay. You can give us a call and we'll talk to you about it. But it is a good idea to go through it. And I think even preparing early and starting to think about this stuff sooner than later, even if it does potentially change, or even if they modify some of the rules, it's still, I think the bulk of this, we now have really what this is for the first time, a really good sense of where they're going with it ultimately.
Yeah, definitely a structure to it. And another thing, if you can flip over to your worksheet real quick. Oh, sorry.
Oh, sorry. No, I can.
Yeah, so I just want to point out, because as I've filled out a few of these spreadsheets just to try and get a sense of what it looked like, you'll notice where Mike has up there step 2 or step 3, that it says don't fill this out if this is if you don't need to, right? So here is step 2. It says only if step 1 does not equal 75%. Well, in a lot of the spreadsheets that I've seen going around, you're kind of natural filling it out for each employee that's on there, and you're not paying attention to those steps. You could really mess up your wage reduction or your FTE equivalent reduction because you didn't pay attention to those pieces. Yeah. So, okay, well, thank you for going through that, Mike. I think the next thing we're going to go through is the documentation that's needed as far as for when you actually apply for the loan. So what data can I begin gathering now? So great things of a summary payroll register for the first quarter 2020, ideally in Excel, of course, so that you can summarize it pretty easily. You have to show the total hours worked in each quarter to get the average weekly hours for hourly employees, the total compensation during the quarter, and a note whether the employee is hourly or salary. So this is all important for safe harbors. To apply those safe harbors, we need to know what the average hourly wage or annual salary was as of 2/15/20, and then for the next period of 2/15/20 and 4/26/20. I will say, and I know I mentioned at the beginning, and Mike referenced it throughout the application, is there's a lot of dates. There's a lot of dates, and it's very confusing which dates apply to which. So I encourage people to write down when they have, hey, these are the dates that I need to look at, so I have all my facts and figures, because they definitely don't all line up. You also need a list of employees who have not been paid during the 8-week covered period for your loan, who either voluntarily resigned, voluntarily reduced their hours, were terminated for cause, or were offered to return to work with a written offer but refused, which we had quite a few clients who had employees that did that because of the generous unemployment payments that were being made and are still being made on those pieces of it. In addition, the application actually talks about, on page 10 of the application, what data that you're going to maintain, but you aren't required to submit. And again, this is just what the SBA loan application says. We don't know what your banks are going to require, because they're going to submit this to the SBA, or if they have a service they put in place for that. So they say to schedule a worksheet or something similar. Okay, so they say the worksheet isn't required, but you have to have something similar to support anything that you're using, which is totally understandable, of your payroll that you paid by employee, their number of hours, if they made what their annualized salary was over 100,000, less than 100,000. We talked about documentation for any employees that voluntarily resigned or refused to come back or were terminated for cause. And then again, documentation related to their hours. So a lot of this should be in your payroll information. This is how you paid people, right? But making sure that you're not scrambling to get this information when you're actually to apply for the loans or don't have questions. Start to try and gather this information, what you've already started. go again, full-time equivalent calculations for the periods in 2019 that we talked about, which this one has the correct date, February 15, 2019 through June 30th, 2019, and the first 2 months of 2020, unless you're a seasonal employer. Obviously, your total amount of your loan, you have to sign the note, so you should know what that is. And if you received the EIDL grant, or still may receive the EIDL grant. I know there's some people that have come up with a lot of those. Another thing that they talk about in the application and as far as documentation is copies of non-payroll costs, so bills for utilities, rent, leases, mortgage interest, all of that sort of stuff. I know we've said it over and over again, but start putting those things in a folder, whether it's on your computer, whether it's actual manual. And I know I've continue a lot of questions related to, do I have to pay all these costs out of the PPP loan bank account that I opened to put the proceeds in? Nowhere in the application does it say that. It doesn't say, show me proof that the loan was deposited into XYZ bank account and all the payments were made out of that. I know a lot of people did that just for ease of tracking things, but it doesn't seem to be required, which makes sense. You just have to prove how you spent the money. So that you're not, when you're actually applying for the eligible forgiveness. So I think that covers everything. I'm sure some people's heads are spinning, as ours were when this first came out, but we're here to help, and so we want to make sure that you may want to rewatch the webinar. If we get clarifications or a new application, we'll obviously update it or send out information. And with that, I'll turn it over to Stacy.
Thanks, Mike and Erin, for walking us through this application process. This is a really complicated process. And for business owners who have a PPP loan, there's really a lot at stake in getting this application process correct to maximize your loan forgiveness. So I just want to emphasize again that we can assist you with this process. Don't hesitate to reach out to us to get that started. And I anticipate that many of you have questions regarding your personal situation. You can submit those questions in the Q&A panel, and we'll follow up with you as soon as we are able. And just as a reminder, if you're not already familiar with our COVID-19 Resource Center, you can visit that on the link below. We have copies of all of our COVID-19 Power Lunch videos, copies of our webinar recordings, of all the articles that we've generated and expanded guides. So do check that out if you're not familiar with it. And we continue to have our COVID-19 Power Lunch sessions. If you haven't signed up to receive those notifications, you can do that by visiting the link on that previous slide. So contact information for Mike and Erin is below if you'd like to reach out to them for any questions as well. So thank you all for joining us. We hope you have a great day.